Hey, what's going on, Skyview? It's Christos, and it's April 26th, 2017. We're just looking to add another trade to our portfolio. Just got a chart of the SPY up and my watch lists here, and kind of been defaulting to this ETF watch list just because so many stocks do have earnings coming up. We're in earnings season, so nothing wrong with that. And if we just take a look at our ETF watch list, FXC, XRT, we already have positions in those two. EFA, we also have a position in that one as well. Here's EFA, here's FXE, and here is XRT. So one of the next ones on the list is KRE. So let's just go ahead and pull that up on the chart. I just like to kind of pull it up to see what we're working with as far as the IVRs here. We see the 12-month at 24, and then the 6-month and the 3-month a little bit higher. So like I said in the last video, 25 seems like the new 50, at least for me, with IV ranks. So definitely not bad, and as you can see, it's one of the top on the list here. It's also very liquid. If we go to the option chain for it, here's KRE. I already have it up. But we don't want to be in May. We want to be in June with around 51 days left, heading towards our sweet spot of 45 days. And if we just go to the at the money strikes, we can just check out the spread between them, and we will see just how liquid they are anytime now. Okay, so you can see 147, 150, 223, 224, 229. So, within 5 cents, and that is fairly liquid. $55, $56 stock. Anything within 10 cents is usually pretty liquid. So this kind of looks like a good one here. I usually start with somewhere around the 30 delta and somewhere around the dollar mark. So it would be either this 54 or 53 area, and then go 3, 4, or 5 points wide from there. Just go back to the chart, maybe check out, zoom in a little bit, see what we're working with here. Looks like the stock is coming off of some type of bottom that it tried to make, and for the most part just kind of stuck in this large sideways range over the last 6 months or so. So we like sideways as premium sellers. That's great. We had some luck with KRE last month, so we'll just kind of go back to the well here with another neutral trade. Maybe we'll start at the 53, and I'll just go to my normal $5 wide spread. That takes us over to 48. And then on the call side, we can either go to this 40 delta is a little bit too rich for me, so maybe we'll try that 58 there. Hold down the control key and click on the bid, and then 5 points wide from that 58 would take us to 63, and that's around the 5 delta on this side. And just wanted to check what the delta was on the protection on this side, around the 7 delta. So pretty nice. I like to be around that 10 delta range, give or take. More like 5 to 15 delta range on my long strikes, and somewhere around that 30 delta range on my short strikes. That's just what I found works best for me. So we collect $1.43, 58 and 53 are where we want it to stay between. So something like that, 58 and 53. Now, whatever you guys want to do by looking at the chart and just playing with your strikes, moving them around a bit, go ahead. As long as you stay largely neutral in your trade, and as long as you're collecting a third to a fifth of the spread width, then you have a high probability trade. And then you're managing that trade early as well, and that right there is going to greatly increase your probability of profit. And as long as we're selling premium, we know that implied volatility tends to overstate actual volatility, so there's another edge right there. And it's just about constructing and molding all of these different edges together that makes our one edge, right? And what we try to do each and every month, and just rinse and repeat the same process over and over and over. So don't try to take a good strategy and make it perfect, because when you try to take a good strategy and make it perfect, you're going to come out with a bad strategy. Okay, and what I mean by trying to make it perfect is never losing, or really thinking way too much into your losses. Look, we went to the 7 delta on the put side and the 5 delta on the call side. So, respectively, there's a 7% chance that we're going to lose to the downside, and a 5% chance that we're going to have a max loss to the upside. And like I said, I like to put my long deltas or my long protection around the 10 deltas. So that's a 10% chance right there. And 10% happens 10% of the time. It's just the math. It's just how it works out. It's just how the cookie crumbles on some trades. And that is the risk that we take on to create our wealth. We have to take risks to create wealth. There's no way around it. And part of the game is losing sometimes. So we just try to make these high probability bets that have a low statistical chance of a max loss. And then on top of that, we trade small enough where a max loss doesn't close our doors for business. So in this low volatility environment, you want to be trading small. So maybe this 5-point wide spread is a bit much. Why don't we try to just tighten it up to 4 points wide? So from 63, we'll go down to 62, and that makes the call side 4 points wide. And then on the put side, we'll have to bring that 48 up to 49. And let's see if I can actually extend this a little higher so we can see everything all at once here. Beautiful. Okay, so that collects around $1.29. That's not bad at all. 58 and 53 are still our short strikes. So 58 here, 53 here, and then you can even just try moving them out. So let's try moving out our short strikes on both sides. Maybe we'll do like 59 and 52. And this makes it so we're not collecting $1, but remember now we're 3 points wide. So let's try to go a little wider and see if we'll be able to collect at least $1. So now we're bringing our strikes back to a 4-point wide spread, and we're still only collecting 90 cents. So now we're short the 52 and the 59. So we'll go back to the chart and we'll just see if that works for us, what we like, what we don't like. It's all personal preference. Remember, there's really no huge difference in if you're picking the 52 or the 53 versus the 58 or the 59. It's just trying to make you personally comfortable while you're staying in our criteria and in our guidelines of what we know has been working for us over the past. So we're still not collecting that $1. So let's see if we can just move one of the sides up or down a little bit more. So maybe we'll stick with the 52 to 48 on the put side here. That takes the 48 down to the 8 delta, so still around that 10 delta range, which is nice. Maybe we'll move this back to 58 and 62 and see what we can collect there. And we collect $1.13 for doing that, $1.14 or so. So I kind of like that. Let's see how that works out. Let's just check the risk profile real quick. We'll see that our max profit on this trade is that $113, $114 or whatever we are filled at. And then our max loss on each side is going to be $287 and $287 there. We can set our break evens, set slices to break even here. And we see that anywhere from 50.86 to 59.08 we will make money. And all that is just our short call of 58 right here plus $1.13. That's what brings us to 59.08. It actually should be a little bit further than that. It should be 59.13. So maybe that kind of moved. There we go. 59.14 on that side. And then our short put of 52 less that $1.13 we're collecting brings us to 50.87 for our break even on the put side. Let's just go ahead and put some price slices on the chart. We'll start with our short strikes, 52 and 58. So we'll leave that there. And this will be our short strike to the upside, 58, and then 52 on this side, right? So we'll get that going. 52. And then 4 points wide from 52 is going to bring us to 48, right? So we'll set a slice right there at 48. Sorry for the slamming on the keyboards. Make this a little bit different. And then we're going to have to zoom out to find that 62 max loss point on the upside. Edit the properties there. 62. Change the style and we'll see what we're working with. So anywhere between this range we will have a max profit, and anything below 48 on the downside and above 62 on the upside is where we get our max loss. So you can see it's just a very traditional, simple iron condor. And like I said, does it make a huge difference whether you pick the 52 or the 51 or the 53 or the 58 versus the 57? No, it doesn't. It's just trying to construct a trade that collects around the 1/3 to 1/5 of the width of the spread, making sure you're in these liquid underlyings and making sure you're managing your trades in a way that put the odds in our favor even more, as well as don't shake us out of our trades, right? And that's why we are very patient with our losers. And I know that scares you guys sometimes because you see a loss or you see a bigger loss or you see something at a max loss point and you're like, oh my God, I don't want to take this loss. But that is what trading small is useful for. And you can see we even made this a 4-point wide spread. So it's a little bit smaller than our personal and usual iron condor spread width. So we're trading even smaller than usual. There's really no reason to get shook out of these trades, take losses early with 21 days remaining in the trade or anything like that, guys. 21 days is a lot of time. So if you are down on a trade, just stay patient. And if you do have to take the loss, well, that's why you traded small. And that's just how the cookie crumbled for that trade. But as far as this trade, here's what it looks like. Again, this is our max profit range. And then our break evens are about $1 and change lower than this and $1 and change higher than that short strike. So let's go back to the trade here. And we'll try to get this one filled. So we'll just right click, click confirm and send. And I always like to edit it just so I can see the spread width and what I'm working with. 110 to 113. It is a pretty tight spread. So let's go ahead and go in at the mid price. See if we can get a fill. Make sure everything's the same here. We are in June. Only one contract, $1.13. We will send that off. Hopefully we get some music to our ears. And nope, nothing. So now we've got this working order here, one of many. The other ones are closing ones, I believe, that we're just waiting to get filled on. But here is the KRE iron condor that we're trying to get filled at. Now we can either stay patient, or if we want the fill immediately, because if we stay patient, we're at risk of not getting filled, right? If we do want the fill, we simply have to right click on the order again, cancel replace, and just walk the order closer to the mid price 1 cent at a time. So we went in at $1.13, it's not filled. Well, let's see if $1.12 works. Confirm and send there. We just moved it 1 penny closer to the natural price, and nothing. Okay, so now we'll have to go back. You can see it's still working. We can either stay patient here or we can move it 1 penny closer. And just to prove the point here, we'll go ahead. Oh, and now you see the spread width actually changed, right? Now 112 is the mid price. And now it's kind of bouncing around a little bit. So let's just hold off for a second here and see if that fills. If not, we're just going to move it 1 penny closer again towards the natural price. So you see it's kind of bouncing around here. Let's see if 111 fills us. So we'll go 1 penny closer. Still nothing. Try that. Hopefully this one gives us a fill. Oh boy, still nothing today. So the market makers are simply not taking our order. But that's okay. That's why we trade these liquid underlyings and these tight spreads. Because we know we're going to get filled somewhere in between this natural and in this mid price. And for me, as long as I have a fairly tight spread, 5 or 10 cents or so, then I'm kind of okay with that. It's when the spread widths are 20, 30, 40, 50 cents wide that you don't want to give up all of that money. And the reason why we keep moving, or I keep moving this toward the nat price, is because having the position on is worth more than the few bucks I'm trying to get out of the trade, the few extra potential bucks that I could get out of this trade if I went in at mid price. So it's like, do you want to risk, a few bucks on order entry, or do you want to risk not getting the trade on and a potential, 50-cent winner or something like that? So for us right now, because we don't have many trades on and we are kind of trying to bulk up our trade count heading into this June cycle, I think the position is more important to us than a few extra bucks. So I'll go ahead and cancel, replace the order again. And now you see 111 as the mid price. Let's go in at 110. So we'll just go down one more. Confirm and send. Come on, let's get a fill here. Still nothing. So that spread's bouncing around and it's kind of making it difficult for us to get filled, unfortunately. But this is a good learning experience because, this happens to us too. It doesn't just happen to you guys. It's something that we all have to fight with, this spread width between the nat and the mid price. So, and now we see the spread kind of really widening up on us here. You just saw it at 1.05. Maybe we'll get a fill here. Looks like we're right in the middle finally between the nat and the mid price. I have a feeling that we'd be filled at 109 if we went in. So since we aren't getting filled at 110, let's see if that 109 fills us. Still nothing. Another cancel replace. And do we dare go all the way to the natural price for the fill? Just to prove the point, I think we will. It's not a bad idea to kind of sit around here and wait for the fill. But just for the video purposes, let's go over to the nat price and try to get filled at 108. Come on. Anytime now. Wow. Certainly a bit annoying. And sorry that the letters are a little too big. We can't even see what it's working here, but 111 looks like the mid price. We're in at 108. And you can see how it's jumping. The NAT price is jumping, right? So let's just wait over here and see if we get this fill. Go ahead and delete that. In the meanwhile, try to keep ourselves occupied, right? See what the SPY's doing. Coming off its highs a little bit, only up 0.06% now. Just a crazy move over the last few days. You're talking since Friday's close, a 50-point S&P move. That's a 500-point Dow move. I mean, that is a huge move. I think a lot of us saw really big profits on Monday just because of the sharp volatility contraction across the board here. But then with the market continuing to grind higher over the past 2 days and not much volatility contraction because it was pretty much all taken out on that Monday move. Definitely been hurting a little bit in our P&L for the days, but again, that's just how the cookie crumbles. You know, we force the market to beat us, and the only way it beats us is with these large directional moves. But a lot of our positions are fine. They're still within our short strikes. They're still within our break evens. It's just a very large and aggressive move like this kind of hurts the position on a short-term basis. But as long as we kind of just fizzle out here and don't continue making 50-point moves in a few days, which is, you know, very unlikely, we should be fine. So still not filled on KRE. Let's go ahead and cancel replace. See it at 107 on the natural. Why not, right? What's a few bucks between friends? There we go. And look, we're actually filled at 108. Oh, no, we were filled at 107. Sorry. Okay, so that's it, guys. Got the KRE trade in there. Glad you guys got to see how we were fighting the spread, and when we do that, we're automatically down a few bucks on the trade. But, you know, it's what's more important to you personally, that few bucks or getting the trade on and possibly managing a nice winner for 50 cents or so down the line. So we got in at 108. We're going to look to manage this at 50% of our max profit. We'll just go back to the chart to get another nice quick little visual on what we're looking for, and we're just looking for KRE to stay within this range, and the only way it can beat us is below 48 on the put side and above 62. You can't even see it on the call side, and again, very low statistical probability that it does get below 48, 8% chance or so, or above 62, which is about a 7% chance with that 7 delta. So that's about it, guys. Thank you for listening. I hope you learned something from this, and until the next video, take care.